Welcome, everyone. So, in today's lecture, we're going to take the idea of risk assessment and pull it right out of the textbook. My goal is for you to see this not just as some theory, but as one of the most powerful, practical tools you'll have in your pocket as future managers and business leaders. Seriously, this isn't just about ticking a box for compliance. It is the absolute foundation of smart strategy, of having foresight, and, well, of making sure a company actually survives.
So let's just start with a big question. If you look at why some businesses succeed and others fail, you'll hear a lot of answers, right? People talk about innovation, great marketing, a better product, and yeah, all of that matters. But I'm going to argue that the single most critical skill isn't about managing what you can see day to day. It's about managing what you can't see, all those potential problems waiting around the corner that could sink even the best idea. It's all about the discipline of managing risk.
All right, so let's dive in. To really get a handle on this, we need to be speaking the same language. We have to build a solid framework. So we're going to start with the basics, lay that groundwork, and look at the formal definition of our main topic for today. This is what everything else is built on. Okay, so this is the definition you'll find in your textbook. And it's fine, it's accurate, but I want you to think bigger. Forget the textbook for a second. Think of it like this. You're the captain of a ship, and you're about to sail into a tricky part of the ocean. A risk assessment, that's you creating a super detailed map of everything that could go wrong before you even pull up the anchor. You're mapping out the hidden reefs, the weird currents, the potential storms. It's not about being negative. It's about being smart. It's about strategic preparation. And here's the most important part. This is an active process. It's not passive. You don't just draw the map and then stuff it in a drawer. No way. You use that map to chart a safer course. The whole point is to identify a risk, and then you immediately design a specific control to deal with it. It's all about proactive defense. You know, it's kind of like the difference between an architect designing a building with a sprinkler system from day one versus just waiting for a fire to start and then hoping the fire department gets there in time. So to get a handle on all this, we can start putting these risks into different buckets. First up, operational risks. These are the threats that come from inside the house, from the day-to-day stuff, the very machinery of how the business runs. We're talking about things like a clunky online ordering system that makes customers just give up, or a server that always seems to crash right during the lunch rush. These aren't some big, dramatic disasters. They're the little internal failures that just slowly and quietly eat away at your profits. Next up, financial risks. Now, this is what most people think of when they hear business risk, and for good reason. These are the threats that go right for the company's wallet, and just as important, its reputation. This could be anything from an employee stealing from the cash drawer all the way to a simple accounting mistake that causes a material misstatement on the financial reports. And let's be really clear about that term. A misstatement is material if it's big enough to make an investor or a bank change their mind about you. That kind of mistake can absolutely destroy trust and get you in hot water with regulators like the SEC. And that brings us to our third bucket, compliance risks. Think of these as the risks of not following the rules of the road. These threats come from failing to obey the laws and regulations that your business has to operate under. And honestly, it doesn't matter how great your product is or how much money you're making. If you're not following, say, health codes or workplace safety laws or data privacy rules, you could be looking at massive fines, lawsuits, or even having your business shut down completely. This is all about being a good corporate citizen. Okay, so let's build on that. It's not enough to just know what the risks are. As a manager, your job is to figure out where they're coming from so you know how to fight back.
So this slide shows a really important split. On the one hand, you've got your internal risks. These are the problems that start from inside the company. And the key thing here is these are the things you as a manager have a lot of control over. If you have a bad control system, well, you can fix it. But then on the other side, you have external risks. These are the big forces from out in the world. A recession, a new law, a global pandemic. You can't stop a recession. So your strategy for these isn't about prevention. It's about being ready, being flexible, and building a business that's tough enough to weather the storm. Now, all this theory is great, but it's pretty useless if we can't actually apply it. So to make these ideas stick, we're going to run through a quick case study. We'll use a simple business that everyone can understand to see how all these pieces fit together in the real world. I want you to imagine this is your first day on the job. The owner hired you to run things. Your goal isn't just to keep the lights on. You need to make sure these trucks are profitable, sustainable, and maybe even get ready to expand. So what's the very first thing you do? You guessed it, a risk assessment. So where do you start? You start inside the truck. You just watch how things work.
That clunky order system, that's a classic operational risk. It's not just annoying, you're losing money every minute during the lunch rush. The cash handling seems a little loose, that's a huge financial risk. Is money going missing? Are sales not being rung up? And see how these things can connect? The cooking equipment looks kind of old. That's an operational risk for sure. But what if that deep fryer catches fire? Suddenly you have a massive safety and compliance disaster. The point is, these are all things you can directly fix.
At the same exact time, you have to be looking out the window, scanning the horizon. You can't control these things, but you better be ready for them. The city passes a new health rule? That's a compliance risk that's going to cost you money. Gas prices shoot up? That's an external economic risk that hits your bottom line directly. And then your worst nightmare. Another taco truck parks on your best corner. That's a strategic risk. For these, your job isn't control. It's about having a plan B. It's about strategy and adaptation.
Okay, let's hit pause for a second and use our new skills. This just happened. First, what bucket does this risk fall into? Well, it's a textbook compliance risk, right? You have to do it or you get shut down. But what's your first move as the manager? The rookie manager just thinks, oh no, where do I get $5,000? But the strategic manager sees the whole chain of events. That $5,000 is a financial risk. Do we have the cash? Taking the truck off the street to install it is an operational risk. We're going to lose a day of sales. So your first move isn't just to find the money. It's to do a quick analysis of all these connected problems and come up with a plan that gets you compliant while causing the least amount of damage to the business. This brings us to what I think is the most important, most practical piece of advice from this whole lecture. It's all about avoiding a huge common mistake that tons of new managers and entrepreneurs make when they first start thinking about risk. I really want you to remember this quote. It's one of those little nuggets of wisdom that holds a deep, deep truth about running a business. It's so easy to get obsessed with the big, dramatic, external stuff, the new competitor, the changing market, and yeah, you have to watch that stuff. But while you're staring out the window, it's often the small, boring, internal problems, the leaky faucet of bad cash controls or sloppy inventory, that are quietly draining your business dry. So here it is, the key takeaway. A business is way more likely to die from 1,000 tiny cuts than from one big knockout punch. A competitor might take 10% of your business, but a bad inventory system combined with weak cash controls and unhappy employees, that can suck 20% of your profit out the back door before you even know what's happening. Mastering risk assessment means you have the discipline to get your own house in order first. And I'll leave you with one last thing to think about. We've spent this whole time applying this risk framework to a business, but now I want to challenge you. Take this exact same framework and apply it to the most important business you will ever run, your own career. What's your biggest operational risk? A key skill you know you need but haven't developed yet? What's your biggest financial risk? Student loans, maybe? What about a compliance risk? Are you sure you're on track to meet all your graduation requirements? Use this tool not just to be a better manager, but to build a smarter, stronger, and more successful career for yourself. Thank you.